everyone. Welcome back to another episode of Reinventing Finance. Again, not by myself. I have my lovely co-host with you, Tom. How are you this fine afternoon?
Thank you, Nick. Looking forward to our conversation with Adam.
And looking sharp as ever, even though we're recording a little bit later today, as we have a great guest from across the pond. Adam, welcome to our humble abode. How are you?
I'm great. Thanks for having me.
Awesome. And I can ask you this fine morning, right? So where you calling in from?
Yes, I'm based in New York, so it's a little bit earlier here. I'm in Manhattan right now.
Awesome. So Adam, maybe we like to kind of kick things off just with a very brief introduction. Who are you and what do you do? And then I'm just looking forward to a nice conversation.
Absolutely. So a little bit of background about me. I'm an investor at Equal Ventures. Equal is a seed stage venture fund located in New York. We're 5 people right now. And my role at Equal is to cover the insurance space. So I look at early stage investments across the value chain in insurance and insurtech. A little bit of an interesting path to fall into that role. So I started my career in financial services. I was first a derivatives trader, an equity derivatives trader, and then moved into capital markets and convertibles. And then after business schools, was sort of thinking about how to pivot into the burgeoning FinTech and tech space, and became fairly interested in insurance as a very large, but certainly at the time, this is about 7 years ago, sort of underinvested and under-resourced area within broader FinTech that had the dynamics that I thought were fairly interesting for both early stage and growth stage investors, which are that it's massive. The consumer experience is not particularly good. It requires a really meaningful use of data and analytics, but is traditionally, very much a manual business that moves slowly. And because of the nature of regulation and opinions about what's investable for venture and for early stage investors, it had not attracted much excitement around that time. So I ended up moving into operating roles in insurance and insurtech to try to learn more, about what's driving innovation and what's interesting in the space. So I spent about 4 years on the product team at a direct-to-consumer comparison site called Policy Genius, where I worked on the life insurance product, largely on the platform side. So, overseeing integrations with new carriers to help launch, new life insurance products that deliver a better customer experience and to deliver operational efficiencies for our, internal processing and sales staff, who make those transactions happen. Which is a really interesting cross-functional role to, see what it's like to work with carriers, to understand the pain points in the transaction funnel and in life insurance of all verticals, which is just a very long and friction-filled conversion funnel. I then spent just under a year at a commercial insurance startup called Counterpart, where I was leading operations. So that startup works on management liability products, so sort of the specialty end of small business insurance distributed through wholesalers at the time. Really interesting opportunity to learn more about a very different part of the insurance space and distribution in commercial, and a very different product set. And then had the opportunity to join Equal Ventures in the latter part of 2022. So I'm fairly new to venture and a little bit less new to insurance, but obviously still lots to learn. And excited to dive into this space. I think it's a funny time to join venture. It's also a funny time to join venture specifically focused on insurtech, sort of coming out of whatever we should call it, like the reckoning of the last few years, in which growth, fintech, and certainly including insurance really did not perform in the way many investors had hoped. But I think it continues to be a really interesting space, and I'm very much focused on finding, assessing, and thinking about opportunities within it.
Before we maybe dig into the maybe reckoning adjustment of the investment hypotheses 2015 right, and how that might have developed, I find it really interesting if you have, are there some kind of insights from your operational role where you said, listen, these were some things that I would recommend, or any ideally counterintuitive things that you've learned in your operational role, kind of going in that you said, yeah, this actually performed a little bit better or worse than I thought, because a lot of incumbents, I would always dream about the agility and I can just, move fast, hopefully not break stuff, but, move fast in a, kind of startup environment. Now, you've been at scale. So maybe any learnings before we kind of go more into the investment side?
Yeah. I mean, there's a lot of learnings.
I'll take 3,
Well, I'm thinking a little bit about what actually might be counterintuitive. And I think a lot of the takeaways from my time, in operating roles in the space, were eye-opening, but I don't know that in retrospect, they're very counterintuitive.
We'll take intuitive as well.
Yeah. I mean, I think, look, a couple things I noticed was that the purchasing process in insurance, and this was true both in, personal lines products, and certainly the small commercial products, that is just filled with friction. It's not that easy for a consumer to either identify the right product that they need or to, fulfill the transaction once they've realized it's necessary. So I think just that identifying the extent of that friction and the way in which the purchase experience is suboptimal from the UX perspective is eye-opening. I think, I mean,
do you
you
have some
mentioned
stats? Do you, because I always, I found conversely, we've had quite a few direct to consumer startups in Europe. And let's just say all of them failed or realized that because we have quite potent price comparison websites in the UK and Germany, but it's a devil's bargain if that is your only source of growth. Now, a lot of them kind of said, we're going to repackage an existing product. It's going to be greater UX, but that didn't seem to translate into a lot of trust. So what I'm thinking, there's obviously things within life insurance friction. Do you need a blood sample? That's pretty high friction, but might have a huge impact on underwriting, pricing, etc. So making an insurance product a one-click shopping experience might not actually be what you're looking after. So are there any kind of cosmetic or UI changes where you said, but here's some things you can do, blah, da, 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 da?
Yeah, I mean, it's funny you bring up that example, because a lot of my time working on product in the life insurance space was actually focused on, trying to eliminate that point of friction in the medical exam. Without pointing to specific stats, you can imagine that's a really meaningful point of friction, both for the agents and brokers who try to organize it for their customers, as well as for the customer who has to schedule. It's not so invasive, but it's still something you have to schedule, and it takes some time, and a fair amount of people are, afraid of needles. And I think, you mentioned something a moment ago about like moving fast and hopefully not breaking things. And I think you never want to break something, but I think insurance is perhaps like the most, the space that is most averse to moving too fast and breaking things. And I certainly, like, another observation that I think ties into this is just the extent of work and time that might go into making fairly simple cosmetic application changes, and certainly more substantial changes, like, I mean, your example of like eliminating fluids or a medical exam at the point of underwriting. And I think there's a lot of innovation going on in that space. I think it's coming both from distributors and from carriers. And I mean, this is obviously an example that's very specific to, a specific instance of friction in life insurance, but I don't think it's so different from the broader ecosystem experimenting with, faster transactions and embedded opportunities and new uses of data and consolidated questions. I think it all sort of points to the same goal of reducing friction, which hopefully will increase conversion, make it easier for people to engage with their carrier. So you're not only transacting in this single instance, but perhaps open to purchasing other products or considering other cross-sell and upsell opportunities that you might actually need, because there's a huge insurance gap in most lines in most countries. And the ways in which, in many ways, brokers, carriers, insurtechs are aligned in wanting to reduce that friction. But the pace at which it can happen and the burden of sort of displaying that you've not broken anything can be fairly difficult. And I think, I mean, again, in the example you brought up, I think in the last, call it 5 years, many carriers have, actually become very interested in, again, in that specific instance of removing a medical exam, because it's clear that it reduces friction, but it also sort of caters to a subset of, in theory at least, your healthier, younger, digitally enabled customers who probably represent exactly the kind of risks that you want to bring on your book. Now, how do you manage the complex, reverse selection issue, right? When these products are meaningfully more expensive to obtain, you're actually attracting risk that might not be good. If people are willing to pay much more for the convenience of not having to do a medical exam, that's actually harder to model, I believe, than, if they're very competitively priced but can leverage data sources that provide real time and perhaps even superior information. I mean, I'm not an underwriter by trade. I've not, there's zero actuarial capabilities that I have, but my understanding at least is that, by looking at things like prescription checks or motor vehicle records or other third-party data that is, privately enabled by the customer or publicly available in some instances, I have to believe it could be, as good or maybe even better than a sort of one, box fits all simple check for medical information. Again, we're clicking on a line that is like fairly antiquated and more complicated to underwrite than most other lines, but I do think it's not that different when you think about in concept. Small commercial and cyber insurers trying to eliminate questions from their applications and trying to understand how they can reuse data and what they need to ask the customer and what can be pulled from public sources. I think it all sort of points back to this balance between making it simpler and improving the experience. Again, to improve retention, conversion, upsell, cross-sell, but balancing, not to end up with bad risk, which is just obviously and should be, not tolerated by carriers, but it moves fairly slowly.
Absolutely, and I think one of the challenges in kind of very long tail risk like life insurance, a lot of it is belief based until the claims kind of come in, while some P&C or even health checks, you can kind of see the flickering light sooner. But I think maybe kind of come, and I think what we've seen is that at the very least, even though it might not be super good for some of the investor returns that has propelled at certain valuations insurtechs, I think we can say that it has given some kind of headways for the change makers that are within insurance companies. There are lots of people who want to kind of change things, and sometimes it's just easier to kind of see we want something like that or similar. But maybe kind of going, how is insurtech still attractive from an investor point of view? What has changed? Shouldn't we run for the hills and be glad that we did not invest at the hype cycle?
Well, you're talking to the guy who joined a seed stage fund in November 2022 specifically to focus on insurance. So perhaps I'm biased.
But you've made there was some form of conscious decision still. So even if it's biased, you probably don't jump into this both feet totally blind either.
I hope not. No, and in fact, it was very intentional. And I think my colleagues at Equal, we're very excited about the opportunity in insurance right now. I think certainly, and there's parallels from other spaces that sort of became very attractive and had, massively changed and sometimes distorted valuations, over the last several years, and then, came back down to earth, catalyzed by the reversal in public markets, the change in interest rates, the sort of change in narrative. So certainly the landscape and the things that I think are exciting are not necessarily the same things that were conventionally exciting, 4 or 5, 10 years ago. But I think the dynamics of insurance remain very attractive, because a lot of the things I mentioned a few moments ago about that, initially got me excited about insurance remain true, right? It's still a space where there's over $1 trillion in addressable market, which is fairly unique. It is filled with friction for customers. It is filled with various inefficiencies for legacy carriers. Now, legacy carriers are also have many advantages, right? They've got often decades or more of very meaningful actuarial experience. They've got processes that can be inefficient, but they are tested. They've got, in the US at least, like a meaningful amount of brand loyalty and often captive distribution. And also importantly, they've got advantages compared to smaller, earlier stage players in cost of capital. So they can bid up the cost of acquisition, or they can scale different lines in a way that a faster growing earlier stage company might not be able to. And I think like appreciating those dynamics and finding the opportunities to collaborate within the ecosystem remains very interesting. And I think we're in the early innings of a multi-decade transformation, not just in insurance, but insurance is one of the spaces that I think we're very excited about. So again, a long-winded answer to your question, but I do think that like we've experienced a little bit of a washout, a reckoning, whatever you want to call it. I think that direct to consumer, very fast growing, disruptive, full stack model to me is less exciting. I am less keen to sort of beat insurance companies at their own game and win on underwriting or win on pace of growth. But I think there's massive opportunities to improve the customer experience, to distribute into new segments, to use data more effectively in emerging lines of business where carriers don't have big advantages that they might have in commoditized lines. So we think a lot about this brokerage carrier enablement opportunity. And you still have to be cognizant of long sales cycles and very fragmented ecosystem where often there's not a lot of willingness to pay for software solutions, for example. But there is a massive need to digitize. There's demand from customers, and there's a non-cyclical massive market that will remain addressable. So I think both US and non-US, I think it's a very, very exciting opportunity space. And you're right to call out that enthusiasm has certainly dwindled. I think there's a lot of investors who don't share our conviction, who sort of, whether they were, dabbling in the space or tourists in the space, as we sometimes call them, or, had strong theses and just were wrong and have moved on to other spaces that are, have different dynamics. Like there's lots of reasons, but I do think there is an opportunity to look for and find conviction in the insurance space now that there's fewer people looking at it, while many of the dynamics remain extremely attractive.
You recently published an article, the Digitization and Enablement of Insurance Agents, right? Which is kind of like a theme. And within that, you stated that insurance is fundamentally woven around relationships. Care to elaborate?
Yeah, I think, back to the observations again. I think another learning that I observed, and I think many have observed this, and it's certainly not a take that is super original at this point. But I think insurance is not that easy to shop for, right? Even if you can do a one-click purchase for some of the embedded channels you talked about, or some of the more commoditized or personal lines where those comparison and shopping experiences exist, there's still a lot of difficulty to sort of determine what you need and whether you need something. And I think there's a lot of cultural attitudes borne out, both because the experience hasn't been good in the past and carriers have made it difficult to purchase these experiences, for better or worse, but also because of the way in which you interact with your insurance company, right? We don't have, and perhaps we will move towards having, but we don't currently have a model where you regularly interact with your insurance advisors or carriers. You sort of interact with these entities at the point of purchasing something that kind of feels like a scam, right? You don't know that you need it. It feels, I mean, we like to, often I think in personal lines, at least, people are surprised that like the coverage that they need might actually be less expensive than they feared, but it still can be a meaningful outlay of cash, and it's a cost center. You don't want to interact with your insurance. The ways in which your insurance is reducing your risks or improving your outcomes seem very back of your mind. And you interact with your policy basically if and only if you need to pay for it or you unfortunately have a claim. And I mean, life insurance is an exaggerated example, but I don't think there's very many happy claims. So I think because of the way in which that creates cultural attitudes about the product, and because of the high stakes of getting it wrong in many lines, and the difficulty of understanding what is effectively a legal contract for the right to get paid if so and so happens to you in a very specific instance, I think that leads to valuing human advice. And I think that even some of the channels that have emerged that are more digital, can be one click, all automated, I think many of those players have observed that having actual trustworthy human advice can actually be very important in that process. So whether it's made available to everyone and used only by some, or compulsory as part of the shopping experience, like that might vary across channels. But I do think there is increasing awareness in the ecosystem that distributors, like brokers, agents, actually are important. And I think that contrasts with some of the opinions about what might happen, at the outset of insurtech. And I mean, if you look at a graph of, when I say outset, right, if you look at insurtech ecosystem funding over the last 10 years, it wasn't really a thing 10 years ago. I mean, it was the base of insurance, private investing and early stage investing was, I mean, a rounding error close to zero, and grew, kind of slowly until the mid 2015, 16, 17, when it massively increased over a 10-year period. I think there was some stats show like 50 billion in funding that poured into the space, but it really came from a base of zero. And I think when we were hovering around zero, the people who were getting excited about the opportunity, for better or worse, I'm one of these people who didn't know anything about insurance, sort of expected that like this will go digital. It'll be a one-click purchase opportunity for most things. It'll be easy to determine what you need because of all the data and advice and customization. And therefore the traditional distributor is less important. I think that's not borne out. I think that's not happened. And I think it suggests that having more trust and more interaction and more individualized attention from a professional is actually important to many people. And there's lots of stats on this. I forget to, I wish I could point to specific, surveys that I've reviewed, but I kind of regularly review data points that suggest things like people want a human advisor. People still think it's important to hear advice about what sort of policies they need, else they don't really trust that they need the policy at all. People want to know who exactly they should go to if they have a question or even want to make a simple change. A large amount of people actually think it's important to physically meet with your advisor sometimes, which I thought is interesting because, even more recently, I thought that was fairly antiquated. But I think no matter how you cut it, the advice component of insurance is very important, which I think means one, the all direct thesis is, from my perspective, at least, dead in the water. Can it come back in the more distant future when the purchasing experiences and advice and customization available in those embedded in comparison channels is better? It could, but for right now, like that's just not the way I see the ecosystem going. But I think that the second takeaway, in addition to the legacy distribution is important, is that legacy distributors therefore need to digitize better, because consumers want that advice, and they're banging the table saying that they value this personalization, human advice, but they also want to communicate over new channels, and they also want to be able to self-service sometimes, and they also want digital capabilities that match other areas of finance or other areas of consumer experiences, outside of finance. So I think it means that this long tail of distributors, both at large brokerages and more typically the fragmented tail of smaller brokerages and agencies, have this critical task of sort of becoming more digitized and changing the way in which they facilitate customers' needs. The sort of facilitating the paperwork and doing all the back end work is not really how agents add value, when much of that can be done electronically or is being condensed in various ways by carriers and insurtechs. The more valuable part of what these professionals do is really providing the advice, and helping people understand what they need, how much they need, why they need it, and making them feel comfortable with that purchase experience. So I think, again, a long answer to your question, but I think there's a lot of evidence that trust is important, that brokers and agents provide that trust, and that therefore brokers and agents, I think, are going to have to change the way that they think about their business, not because they're going extinct, as the very wrong hypothesis said 10 years ago, but because they're not going extinct. I think they'll evolve into a more digital and tech forward age.
Do you have some kind of concrete product propositions or startups who you feel do a decent job about enabling the agent experience, which kind of parts of the value chain, etc.? But do you kind of, to make it a little bit more concrete?
Yeah, I mean, it's funny. We put out a follow-up piece to the one you mentioned a couple weeks after, sort of highlighting exactly that, like what within this broker and agent value chain is addressable. And I think the summary of it is like most of it, because the ecosystem is complex and interesting, depending on who you're talking to. The stack is sort of comprised of an AMS, right? So virtually all agents or brokers have some sort of AMS, an agency management system, that is like the intended to be the source of truth for how they manage their business. But because it's been sort of a walled garden, because those platforms are massive and have been cash cows and have been fairly slow moving, they don't meet all the digital needs of their users, and they can become fairly bulky and complex, and their users tend not to use them right. So the data I found, it's actually quite interesting. I saw a survey recently that showed something in the range of 90 plus, called 95% of agencies, across all sizes of agencies, have at least some sort of AMS in place. But if you look at other solutions, like, do they have carrier submission technology? Do they have a CRM solution? Do they use any form of a chatbot? Do they have servicing capabilities for their customers? They tend not to have these other pieces. So what we see a lot of is point solutions that address one piece of that. It's a great CRM or a sales platform, or a direct submission friction reduction tool, or SaaS for sending applications to a carrier, or getting quotes from multiple carriers, or servicing solutions, and I think all of those parts of the value chain are very interesting. I do think, though, that you have to be cognizant of how they're sort of packaged and delivered. I think one piece of feedback in that same survey, when they ask agents, what is the most challenging part? Is it finding the technology? Is it implementing the technology? Or is it actually using it? It's the use that is the hardest, right? These point solutions, even if they're great products, can be difficult to add into an already complex system. So I think we're most excited sort of about what I'll call like a platform ecosystem, right? So tools that aren't just single point solutions to address a really important part of the value chain, but actually connect various parts of these elements together and can lead to efficiencies without being as bulky, or without requiring these distributors to directly pay, given the fragmentation and often low willingness to pay. So things like, I mean, without pointing to specific companies, right? Things like the topic of data interoperability and API integrations between brokers and carriers, specifically within lines that are really hard to quote or emerging. So, you're not really, there's less clarity over where to shop. I think those are interesting platforms. I think the theme of improving customer data and analytics is really important, right? Because if the core role of an agent or broker is in fact to understand the needs of their customer and preempt questions and make really strong differentiated recommendations, using that data and having, whether it's technology generated recommendations or technology enabled recommendations, is probably going to be more effective than sort of working out of a spreadsheet or a calendar reminder to call so and so every 6 months to check in about their needs. We're also excited about what I'll refer to as sort of margin optimization and servicing platforms. So many distributors operate subscale just because of the sort of the dynamics of how commissions work and the nature of how much you might have to spend on various back-end servicing tasks, right, to manage your agency, given that most agencies are actually quite small. So tools and platforms that help sort of consolidate or offload those tasks, and help agents to focus on their core business, which really is making recommendations and helping their customers and selling with less friction, are very interesting. So that might look like helping agents access new lines of business that they typically don't write or infrequently write, or it takes them forever to write, so they don't really like to do it. It could be much simpler to sort of have a channel into which to help with fulfillment on those lines of business, and that does better for the agency. That also is better for the customer, who can now access better advice and a better UX in lines where they might actually not even get coverage otherwise. Or it could look like operations and servicing platforms that take some of the back end work away from agents and brokers. Or it can look like platforms that aggregate many agents together to sort of help them extract higher commissions and better negotiations, with carriers or with larger marketing organizations. So fairly vague answer, but I think, what I'm trying to express is that I think the business model is really important in how you package these. A single point solution that's just like selling SaaS that does one thing is a little bit less exciting than some of these platform approaches, but you can see that across the value chain, there's very interesting opportunities that can help support brokers to deliver a better experience for their customers.
Yeah, I mean, I do see that whilst the tied agent or independent agent or broker, however you want to call it, channel are somewhat different per country, also historically. There tends to be, especially on the kind of more smaller end of the independent agents, not so much willingness to invest in kind of digital. And I think it has a little bit to do with the way the way commissions work. They kind of counteract different to how other professional services companies who clock their time work. You just don't really take note of your time, so you don't really know how much time is wasted, etc. What we've seen is more and more insurers kind of trying to differentiate not just on product and commission, but by providing certain process improvements. And that could be a business model angle for enablers to make an enterprise sale to. So for example, where it could be, why not help your agent to retrieve the existing policy from a previous insurer, help them cancel previous policies, whatever it is, right? There's lots and lots of steps, and these are then ways that the insurer can pay for it.
I do think a lot of those capabilities come back to sort of the first thing I mentioned, though, which is like the data interoperability and APIs, because so much of the things you just mentioned, right, like making changes or like going back and forth between the distributor and the carrier, is unnecessarily bulky, because they sort of are not using a single source of truth, and there's so much manual activity going back and forth. much of which, I believe could be eliminated or reduced if there was, more fluid and information going back and forth in a shared standard. Now, and certainly the insurance industry has shared standards of information. I spent a lot of time building on them when I was a product manager, but they tend to be fairly antiquated. They tend to not be used in a uniform way, even within a single line of business. So I think there's, better integrations, source of truth, like interoperability, it could go a long way to sort of facilitating a better process, and reducing costs.
Understood. And I think I would probably would we see one of the moats that established AMS players have is precisely having these proprietary data gateways, and allowing for that a connectivity to multiple carriers, and finding the commercial pull to because that's, I'm not sure. I'm sure there is an exception to the rule, but most standards were kind of deployed by commercial adoption rather than this is a better standard. Now everyone just do it, please, because someone has something to lose. So, but understood. And I think it's interesting, and I think we certainly, the one thing that InsurTech has shown that you can, purely digital, once you involve a human person, the business case usually tends to go up. Having said that, it also means you need a certain breadth of product touch points to kind of leverage that person, right? But we do see that as well. Maybe because in another theme that Tom and I are kind of on the lookout, and it's slim picking so far. Maybe we're not looking, but is kind of the intersection of insurtech and climate tech, or net zero, etc. I mean, the only thing that seems to go through the press is one after another large insurance group leaving the net zero alliance for particular reasons. That seems to be kind of breaking the news. But since you also invest in climate tech, have you found interesting intersections within that where insurtech and climate can kind of play a role?
Yeah, I mean, I think it's a really interesting question. It's a really interesting and I think complex opportunity space. I think if you step back and you sort of look at like what is the biggest, if not the biggest, then one of the biggest sort of problems and challenges facing the property and casualty insurance space today and over the near term future is really managing climate transformation, right? There's obviously the risk of, the opportunity of addressing the clean energy transformation, and as regulation sort of drives changes, being able to insure new types of assets and support new projects, and new types of assets and mobility is extremely interesting. But then on the flip side, there's sort of, how do I manage meaningfully changing risks from changing weather patterns, changing storms, changing severity? And it's a big open question. I mean, the other thing, Nick, that you see in the news, if it's not leaving net zero, it's that carriers are leaving some of these most challenged markets. Like I think over the weekend, it was announced that State Farm exited a portion of the California wildfire market. And obviously, Florida, has had similar sorts of departures given sort of that confluence of regulation and increased storm risk and just too many, homes and buildings in high risk areas. We've read reports about, large property developers who, even for like very high quality construction projects, are unable to get either any insurance or insurance at a affordable, a reasonable rate. And so it's like very clearly a problem space that is going to be top of mind and is extremely interesting. Now, I do think it's still difficult to for me at least, to look directly at some of the companies that are sort of underwriting this risk, right? Like you can make an argument that you can use data better and you can model XYZ in a fire or a storm more effectively and therefore offer better coverage. It's not crazy. It's just that, at the very early stages, it's a little bit difficult to validate that underwriting model on very limited traction. And there seems to be, it is interesting for reinsurers to experiment with. It is also very high risk and uh, it's hard to evaluate sort of which of those underwriting measures are going to work. But I do think more broadly than just underwriting these risks, thinking about how do I reduce losses after an event and mitigate the damage that happens? How do I improve resiliency to similarly reduce losses or in some lines of business actually make losses less likely at all? How do I engage the right stakeholders so that I'm prepared when something happens? I think there's a lot of really interesting angles, both across carriers, reinsurers, and insurtechs and data providers operating in the space. So it's not an area where I've personally made meaningful investments, but I do think it's extremely top of mind for most insurance investors today, and it's an opportunity space I think we're going to continue to hear about.
Okay. But it still it tends to, unless you don't want to share any secrets here, which is not what I assume. It feels like it's still quite vague, right? In the sense that I think we all agree that it's this big thing we need to solve. But I do get that, sure you can insure your Tesla. Fair enough. That's not, but honestly, who gives a bleep, right? That's not gonna. I think that's fine.
Yeah.
But and then you have certain commercials who and renewable energy, etc. I get that, right? And I think that's gonna pick up. But that's almost
right.
That's kind of standard practice. I think what's much more interesting, what you've said, is how do we deal with the carbonized? I think two things. How do we deal with policy with risks with policies where the risk fundamentally changes that challenges our current risk transfer models? That's the wildfire proposition, right? Where at some point it just becomes prohibitively expensive, so risk transfer isn't. So then you need to go into whatever risk management or different things, which are just quite difficult to do. But there's other lines of business where insurers have done that in the past. But it's also, I sometimes feel it's almost a joke. I don't know whether the lines are, I think it's something like Allianz rejected 23 risks. I was like, what? I don't even know on which scale, but I'm sure there's more than 23 risks that Allianz is underwriting, or some big name that at some point or another are not pulling their weight around decarbonization. But I think it's really around that. How do I work with my existing carbon heavy portfolios and kind of manage that transition? And I think there are certain solutions out there, I think, which is interesting, but it still feels there lack of solutions out there, or they're not very public, I would say.
Yeah, I think that's fair. I think it's just an emerging problem space or opportunity, depending on how you look at it. And I think there's just a lot to learn, and it's going to be a long-term. We're going to have to test into what this looks like long term, because you can't ignore it. But I also think beyond. I mean, you mentioned you can insure your Tesla. I do think adjacent to climate change, and I think there's just a broader change, sort of like in the way we think of assets, right? Like, I think that Tesla's embedded insurance is actually quite interesting. And I think, a little bit of a departure from thinking about carbon, but certainly because of the climate regulation, we're going to have more EVs and presumably AVs in the not too distant future. And thinking about the ways in which, that climate adjacent trend, is going to change the way we think about mobility and asset ownership and liability risk, I think is very meaningfully interesting for insurers. And I think, there's been experimentation with the embedded models you brought up, with you know, how you deal with these assets and how you sort of deal with the liability. But I think it's an ongoing area for experimentation too. And I think the sorts of products that, you know, consumers are going to get to demand, and the sorts of products that are going to have you know, good economics for carriers long term, I think there's still a ton to learn. So I do think like that confluence of changing climate regulation and climate change paired with insurance and financial protection, I think is going to continue to be a very, very interesting theme. And I think a lot of the opportunities within insurtech will, in one way or other, sort of fall into something within one of those themes.
I would. Sorry, Tom.
What I was always wondering is that, let's say, if you see those different phases of investments, everybody is doing exactly the same at the same time. So let's say if you take, for instance, InsurTech, at the beginning was, let's just disrupt the whole insurance industry because they have so
Right.
not functional websites, and it must be so easy if we have another, let's say, much better looking website on your mobile, then we'll just get all the customers automatically. Then the conclusion was, oh, that didn't really work, or it worked, but if you see then combined ratios, etc., I mean, take Lemonade, then so it's more complicated. So the risk side is more complicated, and the link to the customers, acquiring customers,
right,
because it's a non-topic for a customer. Insurance is not the thing you want to have. You're not laying in front of a shop waiting for the next update from your house insurance. It's not an iPhone or something like that.
right.
And then the whole sector moved to enabling. Oh, let's just do the other side, more B2B, enabling, it's faster, smoothly, APIs, etc. And then probably the next thing is to think about innovation, let's say in this whole climate space. But the funny thing is, if you move into, or if you do your own thing, then at this certain point nobody is interested. So
we try to be long-term investors. We try at least to, you know, to think less about sort of where the momentum is at a given, you know, moment in the market, and more about sort of where the long-term secular themes are. I do think there's confluences, Tom, between these opportunities. Oh, sorry, go ahead.
No, but the interesting thing is, because that's in addition to Nick's question, if you ask then, okay, what's the innovation? So climate change is the big topic. You see those news items that certain, let's say, topics,
right,
you can't get an insurance anymore. I mean, this topic of the last weekend of, I think what's called State Farm or something like that.
State Farm, correct.
Who doesn't want to insure in California? So but that's something which you can see on a long-term perspective for a long time. I mean, I'm from the Netherlands. This country will be, let's say, if the sea level will rise, you can say, okay, on the one topic is how do we survive this, but the other thing is how you're going to solve this. But you see this in all those sectors where you say, where is the innovation? If you already know that we really have to think about insurance in a totally different way, and then you have the let's say the backside of the whole building, where you have to calculate them, and you can say, okay, let's take satellite pictures, etc. But where is the product innovation? If you think about, for instance, climate change, we haven't seen that many interesting new products or solutions yet. But perhaps we just have to wait a little bit longer.
Yeah, I mean, I do think there's a lot of innovation happening. I think, you know, I think change is going to be maybe the best way to call it is like nonlinear, right? It's going to be lumpy. There's going to be advances. There's going to be tests of new models that don't all work. But I think broadly, right, like there are some really important thematic areas of innovation, right? Like there's, you know, catalyzed by, you know, some of the insurtechs, in fact, right? Like that, I think there's an emphasis on claims innovation, on trying to reduce losses, improve the customer experience, pay faster, be more efficient. There's a big trend in embedded, and everything at this point is embedded. It's almost like our own little like mini AI sort of hot area. But I think embedded presents a really interesting opportunity, right? Because it's not just about like tacking on insurance at the point of sale for like additional revenue, which sometimes it is. But I think more broadly, it's an opportunity to extract more pertinent and real-time data to actually inform what the customer needs, how much coverage they need, to personalize their transaction to make it stickier. So I think, it's hard to point to one specific thing that is going to drive, the change going forward. But I think there's a lot of areas of testing and innovation throughout the ecosystem. And I think they will apply to things like shared economy risks, to the energy transformation, to managing carbon and extensive weather and flooding and fire events, to to other lines of business like cyber insurance, where it's not related to carbon per se, but it's a similar dynamic in the difficulty of assessing risks and the way in which there's so much relation between when an event happens and what those losses might look like. And I think across the ecosystem we're going to see massive change. And we sort of, I agree, we are sort of largely all pointing to enablement as this this theme that is just different from before and has become fairly consensus. But in $1 trillion opportunity space, where we know that the carriers and reinsurers are very eager for new partnerships, more digital capabilities, better use of data, I do think that theme is going to continue, and it's going to be a secular theme that investors can lean into for a long time, I think.
Yeah, and I think, Tom, I mean, we've had some of these points, right? It either goes into better risk modeling, understanding certain materials might actually have the same costs, but have different propensity against, keeping up with natural hazard, parametric products. We might see different collectives being built, if not by the state, but potentially by employers and associations to kind of get back to that, which then kind of gives us back to the roots. How much, where the insurtech angle in all of that is, I would probably argue, around data and connectivity rather than product design. I still would go to Lloyd's of London, panel Woods to build my carbon offset insurance rather than to San Fran, quite frankly. But, there we go. I think, Adam, unfortunately, conscious of time, we did say housekeeping rules. We need to kind of be on track.
Yes.
This was really helpful. Thank you so much for sharing your insights with us. And I wish you all the best, and hopefully see you on the circuit at some point in person.
Excellent. Well, I really appreciate you having me. And thanks for the time.
Thank you very much.
Thank you, Adam. Thank you, Tom. Take care.
Bye-bye.
Take care.